Okay, stablecoins are the greatest innovation for the greenback. I couldn't take a whiteboard in my office here and design a better innovation for the greenback.
Hello and welcome to Wealthion. I'm Maggie Lake, and today I'm joined by Chris Perkins, president of CoinFund. Hey, Chris, welcome.
Maggie, how are you?
I'm doing okay. Excited for this conversation. I always love digging into this area because I kind of feel like we're all still a little bit on a learning curve. We forget this hasn't been around for that long. So let's just start kind of roughly where we are in real time in the market. I feel like we have volatility on the rise. There's so much global uncertainty. How is that macro backdrop impacting the crypto market? And I'm just going to use that broadly. I know a lot of people have an issue with even calling it that, but how is it impacting the kind of world where you're living in right now?
Yeah, it's a great question, and it really depends on your perspective and your time horizon, right? As you mentioned, these assets are very young. Bitcoin emerged out of the global financial crisis, and I remember sitting on the floor of Lehman Brothers and going through that. Ethereum is about to hit its 10-year anniversary. And that's going to be a big unlock because when I was in traditional finance, we really needed 10 years of history before we could risk manage an asset. And so we have these very interesting new assets, entire new asset class, right? And it's really hard to put them in one bucket. Mm-hmm. That said, because they're so new, they act like these frontier risk assets. So they're a little bit sensitive to things like when Israel decides to comprehensively attack Iran. Yeah. But that said, we believe in time there's going to be some decoupling where these assets start acting as they're designed. And so if you look at Bitcoin, right, what the heck is it? Is it digital gold? Or is it this frontier risk asset? And we've seen times when it has decoupled from being that risk asset. I think in the longer term, you're going to see that. And then you have this thing called Ethereum, which is now introduced as smart contracts, and Solana that does something similar as well. But then you ask me, what about crypto? Well, what about stablecoins, right? And stablecoins can be in any currency today. It's 99% of internet money is dollars. But, how did the dollar respond, right? Because stablecoins, we're about to be in this very historic period. One of the things I'm absolutely most excited about is this thing called the Genius Act. The Genius Act is going to, for the first time, provide a regulatory and a legislative framework around these things called stablecoins. And for those of you who don't know what a stablecoin is, it's something that's really simple. You take a dollar and you tokenize it, and you can move it throughout the internet very seamlessly. So it's a really hard question. I'd say as a group today, crypto is perceived as a frontier tech risk asset. So it's sensitive to those geopolitical moves or whatever. But the thing that you'll also see is that volatility works in both directions. And so you can have this face ripping melt up or down. But if you step back as an investor, and again, at CoinFund, we have venture and liquid strategies. You put your long-term hat on, something like Bitcoin is the best performing asset in history. So it really just depends on your time horizon.
I love that answer for so many reasons, and I want to unpack everything. People are going to see me taking notes, and I'm so interested to hear about stablecoins. I've been kind of obsessing about this myself, but I love your answer because it's not one thing, right? We tend to think we're using the past as an example or precedent for this, and I think we really have to change the way we think about it. I like that you said short-term, long-term, and we're going to try to sort of dig in a little bit in the time we have to find out what's going on and how we should be thinking about this and lean into your background in traditional finance and the way you kind of pivoted and how you're thinking about this. I imagine there's going to be a lot of questions. I'm going to encourage everyone listening, if you have them, put them in the comments. We will get back to you. We will ask. If you are wondering, is it something I should be thinking about or I should be more exposed to? Get a free portfolio review if you'd like from one of our advisors in the network. You can head to wealthion.com/free. But I really want to encourage you to ask questions because it's new, right? And so we all need to understand this. And if we are planning long term, I think need to wrap our head around how do we begin to approach this, because it's not something any of us had to think about before when we were looking at the do I want bonds, stocks? What do I want exposure to? This just didn't exist. So I absolutely love this. So I'm buckling in. So first of all, frontier tech asset sort of innovation. I think that's really interesting because we are thinking about them more as kind of stocks, I think, or in the same way, or currency. What do you mean by that when you say kind of a frontier tech? Why are you categorizing it as that? Or should we think about it as a frontier tech company? Is that a better way to kind of think about the risks around it?
Maggie, I kind of liked what you said earlier in that it's really hard to put one label on these assets that can be, they're fully programmable, fully composable. They can behave and act like they're designed. And the great thing about this is that it's largely open source. So you can actually, read the code. You can read, it's very obvious and it's very transparent to see how they behave. And now in the age of AI, you can actually literally upload white papers, ask it questions, and really learn about how the asset's defined. And so I really hate putting labels on these things, but this is what I can tell you. What blockchains are, the secret, there's a couple things that they do really, really well. They allow you to put private property into the internet for the very first time. Think about that. Now, ledgers started 7,000 years ago in Mesopotamia. And if you study your history, amazing things happened back then. Algebra came out into being, right? And why? Because ledgers are really not only the heart of the economy, but the heart of civilization. You can check who owns what. It leads to credit. And so that happened in Mesopotamia 7,000 years ago. The second iteration came in the Renaissance with double entry bookkeeping, which formed the underpinning of modern day accounting. And then along comes the Bitcoin blockchain. And for the first time, this is the third iteration on a ledger where you can track trustless, permissionless exchange of value onto the internet. Now, like I said, because you have that internet-based ledger, you can now put private property into the internet. What do you want that private property to be? Well, you can take something real world and tokenize it. For example, you can take an equity, you lock it up, you issue a token, and then you can move it out throughout the internet, trustless, permissionless throughout the internet. You can do it for $1, like I talked about with stablecoins. Or you can create a crypto native product, something like Bitcoin. What does Bitcoin do? Well, there's social consensus. And if you look at the programming of Bitcoin, there can only ever be 21 million coins. And so it's this global scarcity that has now turned into a store of value. So Bitcoin is designed to be a store of value. Maybe the first iteration they thought they could pay, but now it's really like, no, this is a great store of value. And then you go on to something like an Ethereum or a Solana or an Avalanche or a Sui. These are all what we call layer one blockchains. Their token has utility too, because you need to use that token to affect the movement of anything on their ledger. You have to pay for it. It's called gas. And so to put something on that ledger, you need to pay for it. So that it gives you utility. So it's really hard. And then, of course, we have these blockchains, and then we have applications that are built on them. And sometimes they issue tokens, and that token may be doing something else. For example,
so this is where I'm going to jump in, because this is where I think it's getting confusing for people.
Okay.
Because not in this conversation, but in generally as we're sort of educating ourselves. So I'm going to come at it a different way, because there are so many possibilities, which is what makes it exciting. But then, so let me ask this: what is, if I'm sitting here as somebody who's newer to the market, or maybe I hold some Bitcoin, some ETH, I've got a little bit of diversification around currencies. What am I most likely to be worried about? So it's probably Bitcoin, right? Or what am I most likely to have exposure to? If I hold Bitcoin, or I'm thinking of increasing my exposure to Bitcoin, what's happening in that part of the market? How are you thinking about that at the fund? And what do we need to understand about where we are with Bitcoin?
Right. So again, what is Bitcoin designed to do? It has a finite set. There's only going to be 21 million Bitcoin in the world ever. That's how the program works. And so what Bitcoin, the way you can look at Bitcoin is it's a store of value. Now, if you look at dollars, right, over years, governments print money. There's a lot of debasement. And so what Bitcoin allows you to do is, because there's what we call social consensus, people have identified that now this is a store of value, like gold, right? hey, there's a limited quality. I think I read that like you could put all the gold in like an Olympic swimming pool or something like that in the world. Don't hold me to that. Maybe it's more than that, but it's very limited, right? And so now you have this limited digital asset that helps offset what we call currency debasement. So if governments decide to print, traditionally you try to hold perhaps commodities in your portfolio to offset that debasement risk. Well, this is maybe a more pure form of digital gold, essentially. And so it's really looking at dollar weakness or alternate currency weakness as maybe where you start. What makes the value of something go up? Well, there's more buyers than sellers, or vice versa, right? And so there is a social element to this, just like gold, just like dollars, just like anything else.
Do you buy the argument that we are going to see? There's some really large predictions on the value of Bitcoin, like we've got over 100K, and now it's going to be parabolic and go and we've got some really staggering numbers. What do you think? Where do you see that going? If it is like digital gold, a version of digital gold, will it track in the way that gold goes up and down based on uncertainty? And we certainly know there's a lot of talk about currency devaluation right now. Or is it something very different that's going to have this parabolic move and stay up in those levels?
Yeah, look, I think if you look at history, and I'm not here to give investment advice. That's not my job here, but I can just tell you some things that we've identified based on our research. It is like the best performing asset year after year after year after year. What I am seeing is that, like any other commodity, its value is a function of supply and demand, buyers and sellers. What are we seeing now? We're seeing the administration seeking to make America the crypto capital of the world. In the last 4 years, we had that appreciation when the government was actually very much against crypto. Maybe a little less Bitcoin. They were okay with Bitcoin, but they were against crypto. And we saw that price appreciation. Now you have President Trump saying, I want us to be the crypto capital of the planet. Hey, I also want a Bitcoin strategic reserve that's taxpayer neutral, right? This is obvious. This obviously drives demand. And guess what? Based on my career in traditional finance and running around the world after the global financial crisis, working on derivatives regulations, other countries tend to follow the U.S. Like they tee off of us and they say, well, if the U.S. is doing it, I have to keep up. And so we are seeing a proliferation of other countries saying, well, gosh, I need to have a reserve as well. And when you come down to an asset that has limited quantity, that's a good thing for valuations if you see sovereign demand for an asset. We've seen the ETF take off. Now, why is the ETF so interesting and so important for this industry? Well, it's really hard if you've never bought a token before to understand how to do it. Maybe you open up a Coinbase account and try to figure it out, but that's friction. And what the ETFs now allow anyone to do with a brokerage account, they're very used to buying stocks. So you just go into your brokerage account, you buy the ETF, and off you go. And so that's also led to an increase in demand. And so like anytime you think of valuation is really a function of supply and demand. I see a lot of demand out there presently, and that should be good for the price. The other thing that you're seeing normalization of the asset class. Like regulatory risk is coming down. Like I said, in the last 4 years, we operated here in New York, we operated in the United States. Not very easy. But now Paul Atkins, who we know, he's the chairman of the SEC, very pro-crypto. Brian Quinten's the nominee for the CFTC, very pro-crypto, ex-A16Z policy for the crypto team. That regulatory risk is coming off the table. And what that allows now is a lot more institutional capital to come into the space. Why? Because if you are an allocator, an institutional allocator, you had a lot of risk. You're like, hey, I see investment committee. I want to do the first investment of my company in crypto. And what I've known over the years is that investors are very happy taking market risk. They're not happy taking reputational risk. And you have reputational risk if you invest in something and then the regulators blow it up. Like shame on you. Now that regulatory risk is coming off the table. I mean, we have incredible dialogue with the government, with the White House. Like, we talk to them. And so they're like, what do you need? How do we make this work? That opens the door for more incremental buyers, not just of Bitcoin, but the entire asset class. So it's a very exciting time for us.
Amazing. And so from that, and I like thinking about it in terms of a commodity, because it makes a lot of sense based on what you're talking about. Do you, with the reduced regulatory hurdles and the institutional adoption, do you see that spreading from Bitcoin? You did mention ETH, but spreading throughout the crypto universe, or because they're so different in different use cases and they're created for different things, should we not make that jump? So if I'm sitting here thinking investors, institutional picking up for Bitcoin, ETH is next, and then it's going to ripple through all these other, what we call coins, or do we need to think about it differently?
What a great question. And this has been the core issue for the last 4 years, like one of the biggest issues. What's a security? And what the last administration did is they didn't tell us. They said, oh, we're not going to tell you. And then they would, make an allegation, and then we'd go into the courts. And what it really did, that was designed to really slow down implementation of the asset class. This administration is very different. They're like, look, we need to give you transparency. And the United States is really weird when it comes to our regulation. People don't know. And if they learn anything from anything I say today, remember this. Everything in the world, according to U.S. regulation, is a commodity, except for movie receipts, onions, and securities, which are a special type of commodity. Don't ask me why it's like that. There's history. You can go study it. But that's like literally how the law works. But what they didn't tell us was what's a security in the past. Now, if you look at, there's another bill. So we have a stablecoin bill going through Congress right now called the Genius Act. We have a market structure bill going through called the Clarity Act. And the Clarity Act is supposed to help us understand which is which. And even if that doesn't go through, I've had amazing conversations with the regulators who are now saying, look, why wouldn't we give you clarity? And the thing you'll find about the crypto industry, like, look, I've been around for a long time. I've got no desire to break any regulation whatsoever. We're institutional. Just tell us what the rules are, and we're going to be awesome at following them. And so that's going to be it's going to be awesome. So to your question, Bitcoin has always had pretty good certainty. Like, we've known it's a commodity. Even Gary Gensler said it was. That's why we saw the ETFs. Ethereum was a little bit more of a question because it's a yield-bearing asset. This makes it really exciting if you think about it. It emits about a 3% real yield. And to date, in the last administration, they said, nope, can't pay you yield or else it becomes a security. And if it's a security, it's going to die. And so now we're going to be in a position, the SEC just said, well, wait a second, staking activities are not securities. And so we can start earning that yield-bearing asset, which has a really beautiful real yield. And so does Solana. Solana has a real. So it's going to open up a lot of opportunities with very Bitcoin is lovely, but it sits there and it's gold. Now you're going to be able, with a little more research, to start understanding the nuances of some of these other tokens that have really interesting utility, use case, and I believe value. And that's all going to be possible by just clearly defining what it is. Oh, and by the way, one of the most exciting things that we're seeing right now is bringing actual securities to the blockchain. Huge unlock. And let me explain why this is such a big deal. In 2024, the IPO market was around $30 billion. So I want you to remember that, about $30 billion. And if you look at the history of our IPO market, it's actually been down. It's like the CAGR is actually down like 4% if you adjust for 21 and 22. COVID was really weird, but take that out. But our public markets seem to be coming down. Like 81% of our companies are private in the United States, and private equity has been booming it. So like, I think it's pretty obvious to those who are really in the know that IPOs have been really, really hard to date, and our public markets have been stopped. If you look at crypto, here's another weird thing about our regulation to date. We have these things called meme coins that people like roll their eyes and like, oh, this thing is so stupid. Meme coins are tokens that have no value. It's just like, hey, I'm just like a thing. I'm a dog or whatever. But the thing about those meme coins is that they were we understood the regulation behind them. We understood Bitcoin, and we understood meme coins because they didn't have any value. They were a commodity. If you try to like have value, then maybe you're security, maybe not. But they're like, hey, meme coins, they definitely not a security, guys. And because of that, they were allowed to like use this thing called crypto unimpeded by any regulation or anything.
Which is where you got a lot of the negative headlines, I'd say.
100%. But let's like look at let's look at them for a second. And I'm not here to support one, but I'm going to tell you the value that they serve. So remember, $30 billion in 24 in IPOs. Do you have any idea what the market cap of meme coins at its height was last year? Take a guess.
I know it's a heck of a lot higher than that.
140 billion, right? Almost 5x, right? Why? Because what blockchains allow people to do is have instantaneous 24/7 unimpeded access to financial services, which is a huge unlock, right? So boom, and the way that they're able to it's called capital formation, which is one of the fundamental driving forces of the SEC, right? So they're very good at capital formation. And meme coins could do whatever they want. They weren't stopped by any kind of regulation, so off they went. The Trump token, people hate the Trump token, right? On a weekend, they launched this thing. You know what the market cap of the Trump token was? $15 billion while markets were closed over a 36-hour period, right? Against, and it's an apples to oranges comparison. But think about 30 billion in IPOs, 15 billion market cap on a weekend token for Trump. Hate it all you want. It shows how amazing this technology is for capital formation.
So let me ask let me jump to what the point I think that I should take away from this, but you tell me if I'm wrong. So in the meme coin world, it was all this capital formation around nothing. And all of that money, that profit went to someone who was the first to make it and the first out. So that's why people don't like them, because they feel like they're just completely speculative.
100%.
In the declining IPO market, you have real companies, businesses, franchises, whatever, a business endeavor that could unlock that capital formation, but cannot because of whatever market dynamics are keeping them public. So they are missing out on that capital formation, not a speculative attempt to just get rich, but a real business that could use all that money to invest in their future project they believe is worthy. And you have individuals who do not have access to that business because their only means of getting that would be through the publicly traded stock market.
Bingo. And so we're in a point now where we're going to be able to take those equities and use that infrastructure of blockchain to make them more accessible to folks. Private markets are private. We deprive ordinary investors from some of the most exciting companies because they're not accredited. To the extent that we can now leverage blockchain technology to help bring companies public sooner and faster, you can tap into that secret power, that superpower, which is capital formation. Let me give you another example. You ever hear of something called an ETF? Yeah, right? ETFs came out in the 1990s. They were an exciting new wrapper. Not like the music, but the wrapper on top of the. And so the SEC was struggling with it. They didn't get it. And then like Richard Breeden shows up. He's like, you guys figure it out. I want this. And they couldn't say no. The SEC actually then gave it a little assist on the ETF. And for the first time, people could start investing in things they never had access to today. Today, the ETF market is a $14, $15 trillion market.
Most people invest through ETFs.
Exactly.
As opposed
These
to
tokens are the new ETFs. They're new wrappers. And so, again, what can they do? 24/7 borderless access, and you can settle in real time. This unlocks new opportunities for collateral. I used to run in big derivatives businesses at Citigroup, and like one of the things that would keep me awake at night is like waiting for my collateral to come in. I got to pay it out. That goes away. We had banks go bankrupt in 1974, one called Herstat. It's called Herstat Risk because the thing blew up because it paid money out, didn't get the money back, and it went insolvent. So this technology eliminates that. There's a lot of utility. And so as you start looking at tokens and start seeing the utility, and again, I hate putting them under one like wrapper.
I know we're going to have to because that's just the way it went. But part of why I'm asking some of these questions, because in the learning journey, we all have to start to think about it differently. It is not just this ubiquitous like one market the way we think of it. Yeah. Let me ask you a question on that. because I think this is so interesting, and maybe one of the better explanations I've heard of tokenization. So thank you for this, Chris. If in this process where what was trapped in a, maybe that's a too negative a word, but what was held in private markets now moves into this tokenized market with more access, do you get better price discovery? Because one of the complaints about private markets right now is the excess liquidity swashing around the world through stimulus, through COVID, had to go somewhere. So much of it funneled into private markets. So you could have a company that didn't have a prayer in hell of getting out of or being profitable. You were getting a ton of VC money because it had to go somewhere. Does this make that more efficient somehow and reward the people who have real business models and a real chance? Or unclear?
What a great question. So when we see a lot of crypto projects that, they may have equity, they may not, they may be a protocol, right? A lot of these projects, they actually go public right around Series A, and not with their equity like an IPO, but they launch a token. And that is, we have a lot of issues around the process by which that happens. But gosh, once you're out in the public markets, the markets tell you every day how they feel about you, and there's no hiding, right? And one of the cool things about token issuance so early is that they're public, they're liquid in many cases, not all cases, I'm overgeneralizing, but you can risk manage a Series A exposure. In the legacy venture space, if you make a private investment on an early stage company, you're stuck with it. You're praying for the best, and 7 years go by, and maybe it works out, maybe it doesn't. It's not easy. It's doable, but it's not easy to very proactively risk manage. Now you have a liquid Series A exposure in the public markets. You know exactly how the markets feel. You know the exact liquidity, and you can be much more effective at proactively risk managing it.
Or you don't invest for everything becomes more short term, like everything, and no one's investing for the long term. And I'm asking this because some of the people listening are probably people who have access to private markets and are stuck in this.
It depends on your outlook. You can be a trader, you can be an investor. There are opportunities to trade when the market goes up or market goes down, or you can be an investor. Look at the fundamentals. And what we do is we always underwrite anything that we're thinking about to fundamentals. Yeah. And the cool thing about crypto is that fundamentals are everywhere. Like data is everywhere. And you can go on chain and you can see the number of users and number of wallets. Now, it's not easy to decipher and distill, but it is possible to apply fundamental research, deep fundamental research, to a various project. And it works.
So, and I'm going to skip on to this next session, even though there's a ton more to talk about, and then we'll come back. So, stablecoins.
I love it.
Yeah. So different than what we're talking about right now, I think. A different aspect, one that seems to also be at a tipping point where might be a lot more traction. Explain to me what's happening there and why that's so important.
Okay. Stablecoins are the greatest innovation for the greenback. I couldn't take a whiteboard in my office here and design a better innovation for the greenback.
US dollar.
The US dollar, right? Which is our greatest export. Why? Let's talk about what a stablecoin is. When you create a stablecoin, and by the way, Tether is the most prolific stablecoin provider. They made $13 billion last year with a handful of people, one of the most profitable companies per capita in the history. You take a person's dollar, you take that dollar, you invest in treasuries, and you give them back a token that's a tokenized dollar. They keep the float, and then you have this tokenized dollar. What can you do with it? Well, you can pay someone anywhere, any place, any time in the world. You can move it into what we call DeFi and try to generate yield. There are different yield strategies that you can use. Right now we even have AI bots that are helping people to optimize that yield. It's fascinating. It's an exciting space, but that's another conversation. But anyway, you take a dollar in, fiat dollar in, and you give back a tokenized dollar. Now, there's a law that's being passed, and it has broad bipartisan support. And dare I say, knock on wood, this is going to happen. It's going to happen this summer. And for the first time, we're going to have a regulation and law around stablecoins. What does this mean? It means that there will be a lot more transparency and disclosures and licensing around how to make sure that the dollar that they give you is reserved and risk managed. The Europeans are doing their own thing as well. They have something called MICA.
Mm.
But why is this so important for the U.S.? Well, number one, if you're in the developing world, would you rather have, and you're sitting there in Zimbabwe or Venezuela or whatever, would you prefer to have the local currency, or would you rather have dollars? Well, you'd rather have dollars probably, because local currency is very volatile, as is a lot of crypto assets. And so now for the first time, you can have access to them.
Because you don't have to get it through a bank.
No, you just get it through your phone, right? All you need to do is set up a wallet, and yeah, there's on-ramps and things like that, but you're able to receive these, accept them, sit on them, whatever. Huge issue. Oh, and by the way, the United States Treasury, which tends to be a conservative organization in my experience, they've already stated that in the next couple of years, they expect for this to drive $2 trillion in demand for U.S. Treasury bills. Which
I just want to stop and pause here, because all we keep talking about is the fact that there's a capital flight out of the U.S. and that there'll be no buyers for U.S. Treasuries. But folks who are in the crypto world have been pointing out to me repeatedly that there is this built-in demand, if this all should happen, of a constant purchase of treasuries because of it is the backing of stablecoin.
This is already about a $250 billion asset class, growing very fast. Once you have regulation around those reserves so that you can help prevent what we call a depeg, where it doesn't equal a dollar anymore, the demand is going to be insatiable. I mean, we've recently heard the banks are seeking to get into this space. Why? It can be very profitable. Like I said, Tether made $13 billion with a handful of people by capturing that spread. Circle just went public. Look at Circle as a really interesting example. They offer USDC. It has been very hard to get market exposure to stablecoins.
Yeah.
You can't invest in them. Like, hey, I'm investing in stablecoin. It's $1. It's not going up, right? So how do you invest in these companies? Well, they've been private to date. Now, for the first time, you had an ability to invest in a public offering, Circle. We saw what happened. So it shows that the market understands the pent-up demand for how powerful these things called stablecoins are going to be. So it's going to drive demand for treasuries. It's going to perpetuate the dollar as a global reserve currency for decades to come. And it also, frankly, enhances our national security very materially. And that's my background. I was a U.S. Marine for many years, studied national security in graduate school. And here's why. Because if that dollar, that tokenized dollar, makes its way to North Korea, guess what? The treasuries are still sitting in a custody account. And through due process, we can go and we can do something called freeze and seize and deprive the North Koreans of that asset. So that's how it works today. Again, if you're the U.S. government, you couldn't imagine a better thing for your dollar, your greatest export. And I think it's going to be big.
If all that is true, that's also a huge incentive for the rest of the world to have their own stable coins. Are we looking at a multipolar world where everyone has a stable coin? And I'll further complicate that by saying, I think the thing that people are worried about is that it's not Circle and Tether, it's a U.S. central bank digital currency and a Chinese central bank digital currency because of that reason that you just said.
Oh, man, what great questions. So the first thing, there's a couple issues with stablecoins in my mind. The first is that they prevent the end user from receiving interest. And so the question is okay, maybe that's really good for tokenized money market funds. And we're seeing a lot of them come on the scene. There's some reasons why certain maybe lobbyists don't want to see that interest being paid out, but we'll park that to the side for a second. Now, really interesting thing is that today, 99% of internet money, stablecoins, are dollars. But in the real world, it's like 57% or something like that. Oh, and by the way, FX markets are a $7.5 trillion a day market. Massive. The entirety of the crypto industry is like 3 something. That's 7.5 a day. So the market's insane. Now, the Europeans try to get in front of this. Their currency has been struggling a little bit. I would argue that's because of the way that they over-regulated it to a degree. I would like to see them to be a little bit more thoughtful around some of the ways they characterize the regulatory capital, but I think they'll figure it out. So they have a stable coin. Circle has one. There's a couple of other folks that are launching stable coins. It just takes a while. Will there be like G7 currencies? Probably. But there's a scenario where the dollar becomes more dominant. I know, I said 99 versus 57. I think it's going to settle much higher than that because, again, of demand. If you're in the developing world, you probably would rather have dollars than maybe your local currency, or at least have a lot more dollars because of a hedge. So those are very, very important.
So you must be having conversations in Washington. Do you think that there are a lot of folks who are frustrated, not just in your industry, but generally of I'll put the whole of Washington, that the political class in general, regardless of who's in the White House, regardless of who's in Congress, are slow to move on this and slow to recognize the advantage that this could give the U.S. Do you feel that this is fast tracked now based on the people that you're talking with?
Yeah, we've hit a tipping point. It's moving, it's happening. There was a lot of political. There's always the sausage making is the sausage making. People aren't used to it. This is how it goes, and we're going to get legislation here in the next couple of months. Like I'm seeing momentum. It's happening, and it's going to be awesome. You asked a question around CBDCs, which are government issued securities, stablecoins, central bank digital currencies. In the U.S., we've seen backlash against this, and you can see the fear of, gosh, what if I have this digital currency from my government? It sits in a government-controlled wallet, right? And then, like, gosh, if they look at my social score, they can actually run smart contracts on it and just start burning my money. That's no good. And so, like, we've seen broad, like, backlash against that in the United States. I don't think that's happening anytime soon.
Interesting.
That's not the case in other countries.
I was going to say, presumably, no friction at all in China, where they essentially already do that.
Yeah. And so, like, I think that's an opportunity for the United States because, you know, we're pushing out a product, and what you're trying to do with any stablecoin, right? You're trying, it's a competition for demand.
Yeah.
Right. So which one would I rather have? I think that's going to be very beneficial for private stablecoins because, you know, what's the utility? Which is a better product?
And so they're so ubiquitous and out there already that it's like the cat's out. Like the governments can't stop the private stablecoins if they wanted to at this point, or could they?
They can't. The thing is that the BIS, which is a bank organization, they just published a paper, I don't know, a month ago or something. They said, we need to contain this crypto thing. And I was like, guys, this is not like George Kennan in communism. Yeah. You can't contain it, right? This is the internet. Like, it's out there and anyone can access it. You can't put the toothpaste back in the tube.
Right.
How about we do something a little bit different? And instead of trying to contain crypto, why don't you make sure all your banks embrace it so they can fix their tech, so they can settle in real time like we can over here. I've known both worlds. Yeah. And I'm telling you, the next real threat to our financial system is going to come from that basis. You know, I've been through a million stresses. I was on the floor of Lehman Brothers when it went bankrupt. I've been through it all. Always just because of liquidity risk, always happens on a weekend. And guess what? If your markets are open and you can rebalance in real time, you adjust to market conditions. If you have another side of the market that's frozen, bad things are going to happen.
Yeah, this is when collateral scarcity, counterparty risk, that's what it 100%. Blew everything up. It was what you can't see. But people, I almost went down another rabbit hole, Chris, but we'll save it for next time. Because I also reported through the financial crisis and was there. So, but because I want to keep on this is, again, I think you're making so much understandable to folks who are trying to wrap their head and look for opportunity. So let's go back to tokenization. So you talking about being able to tokenize and the change in private markets. Talk to me a little bit about the real world aspect of this, because I think, again, we're at a juncture where people are looking at their portfolios and saying, like, am I really diversified? Should I have more real world assets? What does a real world asset look like? Is there things in land or real estate or other tangibles that would have been collectibles before, but now somehow have value in this new interesting world? What's happening there?
I think it's early. You know, we have meme coins that really showed us the power of capital formation. They also did a great job in really stressing blockchains and really creating operational throughput. We also have this thing called NFTs that people roll their eyes now and they're like, oh, NFTs. But they served a very vital purpose, and they showed how, you know, you could have discrete tokenized, you know, assets, art or whatever, and it really proved the use case. When it comes to tokenization today, we started with the simplest thing of all, dollars, right? Stablecoins, product market fit, 250 billion, going to go to 2 trillion according to our own government. After that, what are we seeing? Well, we're seeing money market funds, the next iteration of tokenization. Again, look at, Superstate is a company of ours. They have quite a few. There's Biddle on BlackRock. You got Benji. That's the next one. Now we're starting to talk about, for the first time, stocks and equities. Yeah, that's going to tokenize. Ultimately, where are we going? We're going to a place where you can pretty much tokenize anything, right? You can tokenize real estate. I can tokenize my iPhone. I can tokenize everything and effectively create securities out of them, because you're creating shares in something that's potentially illiquid. You can remember, capital formation and really liquidity is what you can do. Those are some of the superpowers of blockchains. That's the promise. I don't think we're there yet. We're seeing some projects coming out right now that are saying, hey, I can give, I'm going to start with real estate, but very, very hard. We've looked at hundreds of these projects. Eventually we're going to get there. I think it's early. I think it's early right now to just jump into a tokenized, like something illiquid. There's reasons why certain assets are illiquid, and tokens can help, but not necessarily. And I think this new regulatory, so we had this thing called fractionalization where, hey, I've got this like really expensive NFT, a CryptoPunk, whatever, we can fractionalize it up. Like Hester Peirce herself said, that's a security, guys, if you do that. And in the last regime, if anything became a security, it was a death sentence. Now I think we're going to have the ability to understand how we can deal with securities. We'll have clarity, and maybe that galvanizes and breathes life back into this concept of making the illiquid liquid. But I think it's a little early from my perspective.
Yeah, that's a great distinction. I think I always say that when I don't know if anyone's visited Italy and looked at all the glass blowing. I'm like, just because you can blow glass doesn't mean you should always end up with what the result. And I'm a big fan of some of the works of art, but it's kind of that thing. Just because it does exist doesn't mean it needs to. So for people, in terms of like next steps, if I'm thinking about this, a lot of this still seems, for all the excitement and the growth and the change in the regulatory regime, it still seems like it's not easy to execute, right? Like it's not easy for an individual person to figure out how to add this stuff to their portfolio, save a Bitcoin ETF. Do you agree with that? And is that changing?
Yeah, look, you're going to see a proliferation of ETFs. The Bitcoin ETF is out there. It's doing pretty well, very well, actually. The Ethereum ETF is an imperfect instrument because it deprives investors of the most exciting part, one of the most exciting parts, which is that yield, right? But you're going to see products that are focusing on bringing that yield back into the asset so they can avail themselves of the full value and quality of that asset. But now with that certainty that I'm talking about, you're going to see a proliferation of ETFs coming out. You're going to see a proliferation of other related products as it all comes down to that taxonomy. So I do expect for like Robinhood just did a major deal with Bitstamp. They're good. We just saw eToro. So you're going to see a lot more just easy user experience access to crypto. I was at the Coinbase Crypto Summit yesterday, and man, they put out a number of releases that just make it easier for people to access the asset class. And that regulatory overlay now and that clarity is going to really make it easy. And then this user experience follows. So I think there'll be incremental opportunities to buy like those native assets themselves or the security wrapper and form. Like we're even looking at some things on we're seeing, I don't know if have you seen these Treasury acquisition companies where companies will go out and buy crypto? Yeah, this is a big deal right now. In the last couple of weeks, it actually exploded. So Michael Saylor is very famous for this with strategy, where he went out and he just bought Bitcoin and he had a public company so you could buy his stock and have access.
Right, for buying.
Exactly. Well, we're seeing that now across numerous different asset classes. There was an Ethereum product that just launched that did this very similar thing. Joe Lubin was involved, one of the co-founders of Ethereum. So that will be another way for investors to access the asset classes by underwriting and buying into those public companies that are effectively they sit on treasuries of their underlying asset. that's super interesting on the equity side.
Again,
And
I'm
I
just going
think
to interject, like, as with all of this is why it's really important to either really do your homework or
100%.
talk to an advisor to find out about this, because I know a lot of people who are very concerned about micro strategies risk, not because of the action itself, but because of some of the other exposure and knock on if this happens in a market and there's a cascade or something happens with interest rates.
Right.
These things are a little bit complicated because they're new. So do your homework on that.
100% not investment advice. I'm just simply telling
Yes,
people
about
about
what to be.
products
These
that
are
are
the
out there.
questions we want you to ask
Yeah.
advisors, whether it's one that you get from
100.
Wealthion by going to that website I said before for a free portfolio review, or it's one you have already. These are the smart questions you want to be asking your advisors, or the homework if you feel you're capable of doing yourself.
Yeah, 100%. But you are seeing a new class of, essentially it's called a reverse merger. And what a company will do is they'll buy a shell public company, and then they're replicating the sale or strategy with new asset with new tokens.
Yeah.
And so it's a way to abstract some of the operational complexity of buying that token by just buying that equity right out of it. And the thinking is that company may be able to have a little more flexibility in generating yield or
Yeah.
et cetera.
And they're
That's the piece.
more knowledgeable about some of the interest, because there's those easy bridges, that
Yeah,
we have in these existing asset classes don't always exist yet in this
100%.
world, and that's what I'm excited about. I'm this person who likes an easy bridge. I'm waiting for that. Are you
100.
so? Let's end with a little bit about, you keep saying we looked at that, we're in that. What is your role? What is CoinFund doing in here? Where are you concentrating your efforts? What do we need to understand about that?
Yeah, so we're investors. We have three strategies. We have a pre-seed, seed, venture strategy where we invest in early stage founders. We have what we call a venture strategy, which is a Series A and B fund. So we look across the gamut. We look at various projects, and we invest in those founders. The Series A and B strategy, generally, there's a little bit of product market fit, et cetera. We have a liquid strategy where we look at liquid tokens. We actually invented the risk-free rate of Ethereum, something called Caesar. We are in the process of doing something really special with that. And by the way, I talked about all the equity exposure that that we're talking about, whether it's the proxies or the ETFs. I also think there's going to be an entire array of fixed income products that are only now coming out, and this is going to be awesome. If you think about it, you have these blockchains that provide yield, right? You can create fixed income around that. And there's the opportunity for so much financial engineering. It's so exciting, structured products. And each of them is different. Each of them has a different value chain. Mark my words, fixed income is going to be like one of the biggest horizons in crypto that's completely undiscovered today. And that's just a very exciting part of this market.
Spoken like a true derivatives person. That's where that's the great thing about your background, and I'm sure how it lends to you seeing these opportunities ahead of the rest of us, because that's a world that not all of us fully understand. How did you make the jump from, you mentioned that you have a background in institutional, you did all the derivatives work, you were on the floor of Lehman. How did you make the jump to crypto? What was the bell that went off for you that you said, this is where I want to be spending this part of my career?
Do you know Sandy Call by chance?
No.
Sandy Call is she's the head of innovation at Franklin Templeton, and
I've been at events with her. Yeah.
So we sat next to each other for like 10 years, and and she's a futurist. She's she's always out there like thinking about like innovate. She's amazing, like one of the most incredible people in the space. So we kind of got into it together, I think around 2014 or so, sitting on the desk there at Citigroup, tried to get it going. And for me, it was that settlement. Like I was dealing with these $1 billion margin calls that I'd be waiting on. I'd be like, well, where's my money from? When the yen coming, guys? Like we're taking a lot of risk here. And I was like, wow, this can completely help me. I thought about making the jump, but had plenty of stuff going on. And then ultimately I just couldn't stand it anymore. And I was just like, wow. I talked a little bit about my thesis around Mesopotamia and how big this could be, private property, the internet. And I was just like, I got to be a part of this thing. Like and I've been full-time 4 years. I will tell you that the highs are high, the lows are low, but I've never been around smarter people that are building big things than crypto. And like, yes, AI is very exciting and sexy and changing the world. Um, but and we look very closely at that intersection, which is also largely undiscovered. But gosh, these technologies, when they come together, it's insane. And so, I don't think people have really realized how, crypto's had its ups and downs, and it's a new technology, and it's almost a benefit to us as investors that it has a little bit of a, not a great reputation, because that perception has nothing to do with the value that I see every day and the founders that I see that are like the most intelligent, driven people I've ever come across in my life.
Yeah, I couldn't agree more. And I feel like, it's like every frontier, and it involves money, which matters enormously, right? And so there's all this unlock, but it's bumpy. Frontiers are bumpy, right? And there's a lot of risk, but seeing through that, and I love the innovation part. And your description of this entire thing has been kind of wrapped in innovation, and that's what this is, right? It's another sort of innovative move forward. And so, rather than, I feel like the media likes to jump on everybody loves a scandal, right? And so it's been like sort of like anchored in the narrative. But I think all of this going on is hugely exciting. And you explained it so well, Chris. So we're really benefiting from your understanding and your background in the traditional markets to be able to sort of make the connection of why the growth is real and why the opportunities are real. So it's been mind-blowing. Thank you so much.
I really appreciate this. Has been wonderful. Thank you.
I can't wait to hear about it and keep up with you. Keep us posted. We're going to come back.
Yes, ma'am. Looking forward to it.
Before we completely wrap, just want to punch in and get your thoughts, because you mentioned your background in national security. Thoughts on what's happening right now in the Middle East. The news flow is going to change all the time, so who knows when we're going to be able to air this, but just like, do you think this is a major development? How do you see this playing out? What should we be focused on, especially as investors?
Yeah, it's the Middle East has been such a challenge for the United States. Since the Obama era, we've really wanted to shift our focus, our national security, and everything to the Pacific. That's where the real challenge, the strategic challenge seems to be coming from. And I know that President Trump and Xi Jinping came together with an agreement recently, and I think we welcome that. But that strategic competition, that is much more strategic, but we keep getting pulled back into the Middle East, and it's been very difficult for us because the stakes are very, very high. And look, from a market's perspective, typically geopolitical issues come and go, and the strike happens, markets come down, things settle, they go back up, and we're able to navigate. What we're watching out for, something much bigger, escalation, protracted, and I think, again, long term versus short term, we feel very good about the positioning of the crypto asset class that tends to carry on and execute as it was designed, despite geopolitical macro pressures. Dollar goes up, dollars goes down. It does what it's designed to do. And if you can understand it and you can underwrite it, I think it can be a very valuable part. So, look, we are very hopeful that escalation, there's no escalation, things return to some kind of stability. But gosh, it was quite an event the other night, and to see where the ducks land, see where the pieces land, and hopefully we end up with some kind of stability.
Yeah,
that's our hope.
It's been elusive, but I think that's all of our hope.
Yeah.
Chris, wonderful to spend some time with you today. Thank you so much.
Likewise, have a wonderful day.
If you have any questions about how to navigate the current environment, Wealthion can help connect you with a vetted advisor to get a free portfolio review. Just click the link in the description below or head to wealthion.com/free. There's no obligation, and it will just take a few minutes of your time. Again, that's wealthion.com/free. Thanks so much for joining us. We'll see you again next time.